Good afternoon, Europe. Good morning, America. To my European friends, perhaps you thought I was not going to stream today. Fooled you. I was trying to diligently finish up a new money supply exhibit, trying to get the entire global money supply in here. Took me a couple hours, but I wanted to do it today because I promised it today. So, going to catch our American friends early in the morning, later at night for our Australian, New Zealand friends or Hong Kong friends, Asian friends, wherever you are. We got some brand new stuff right here. It's going to be good. Good morning, Ken. How's Toronto this morning? We're finally getting some snow here. So here's a slight improvement on my money supply data. As you guys know, I've been doing the monetary base for like nearly 8 years. This is the monetary base, central bank money around the world. It's good. Buy the dip, buy the dip. Not financial advice here, of course, but long-term outlook is really all we need to get through all this stuff, right? So I got this couple changes. I got this on a weekly frequency, and I'll provide more updates when I actually do my quarterly report this quarter. I got this on a weekly frequency now, and there's about 25 more currencies. I was showing, I'm not sure exactly. I got to go through it. I scalped it from the IMF because they had some, but it's kind of unorganized. So 20 to 25 more currencies. My June report was about $27 trillion exactly, and this is 27.38. So about $378 billion is added now to my global base money set compared to previous quarters. There'll be some tweaks here and there, but it's nothing has principally changed. This chart looks exactly the same if you've followed me for a while. Right, little bump here, Y2K. A lot of bumps here after the GFC. Now I wanted to look at, we're going to bring Bitcoin in very soon. Bitcoin's coming very soon, but let's just, the main question I want to talk about here, which was asked in a couple of tweets, David asked and some other people, is, let's keep drilling down on what Bitcoin actually does versus the money supply. The first thing I would say is it's very, in my opinion, finding this as like a guide towards the next few months is very difficult. First of all, because the global data, it takes months to compile. I have in here a US, oh, sorry, I don't have it in here yet. This is just base money. But now I'll show broad money, and then I'll continue the disclaimers. So here's base money, 27.4 trillion dollars at the moment, or as of June 2025. Now I'm going to put on broad money. That's all the deposits, time deposits, money market funds, repurchase agreements. in all currencies, but translated back into US dollars. All right. So it's base money and broad money. A bunch of currencies came here, both from the IMF, and also I have not gotten a solid euro amount, which is a big part of this gap. But it doesn't matter. We're not focusing on this. We will a little bit here, but not much. It's the only sort of missing piece still. But let's just zoom into where we are roughly today. All right. $142.8 trillion. Now, a lot of people say in Bitcoin Twitter or wherever that, you know, all central banks do and all governments do is print money, and therefore Bitcoin is going up. I think generally you can get away with saying that over the long term. It's not an incorrect thesis. Over the short term, it's not always true, but also importantly, if you want to compare it to Bitcoin in the short term or make some price projections of where Bitcoin could go based on the change in the money supply, it's very difficult to do it globally. A primary reason that I say that is the Federal Reserve, I've said many times, they have not published M3 since February 2006. In that M3, there was incomplete information. They had probably an understated euro-dollar balance, stock of euro-dollars, which is offshore dollars, and definitely, because I verified it, an understated stock of repurchase agreements, both of which are in M3. So they stopped publishing it in February 2006. Many people have criticized the Fed. I think anybody who's semi-serious about looking at this data should criticize the Fed. I mean, it's the governing body of the money supply, and to say that M3 no longer has any value is quite a disingenuous comment. That's what they said when they stopped publishing. I've done many videos on this. You can see back in the early days, a couple years ago when I started to do these videos, you can see more about the problems with the money supply and whatnot. But anyway, I do create a new M3. Most of the data you can get from the Fed. The one piece that you can't is euro dollars. Right? So I'm still thinking about this and trying to get a good balance, but that's not included. Euro dollars are offshore dollars. So Argentina is becoming a dollarized economy. We do catch the actual cash. All right, we know how much physical cash the Federal Reserve has printed, banknotes. No more pennies, by the way. No more pennies. But the cash and coin is included. But we don't know, without going through a fine-tooth comb of every balance sheet, or I should say survey, that the central bank does, and often they don't delineate foreign currency in dollars versus euros or other main currencies that other countries might hold in their money supplies. I haven't seen a good set of that, and I've seen a vast array of projections of how big the euro dollar market is. It could be 10 trillion, it could be 50 trillion. All right, so euro dollars should be in here. So I don't have a euro dollar metric here. Let's just stick here without going too much in the past. But I do have the rest. That is repurchase agreements, institutional time deposits, money market funds. Those things are in M3, and the Federal Reserve does publish them, but albeit on a very slow, delayed schedule, and it's very annoying. But you can make a money supply with M3. So it's a long-winded way to start this video of saying that's in here, but it's only updated 4 times a year and quite delayed. The next release that I will need to do third quarters will be in December. So it's, you're always going to be 2 months and more delayed with this. So I don't, I could estimate, I could take the prior balance and increase it by a little bit. I could do all those things, but I actually don't want to do that just because it might not do what we think it does, and I don't want to estimate it. So I'm not going to. So that leaves us with this money supply pretty good. It's probably more, right? Because we don't have euro dollars in here. We should have it. 142 trillion, 143 trillion dollars is the global money supply. That's, you know, that's a lot of, not trying to, you're not going to find this on Bloomberg even, okay? Because the IMF doesn't release this, and if you have to take a lot of different sources, you got to put it together. Uh, this is pretty detailed. So 100, and it's probably still understated, by the way. It's probably still understated, but 143 trillion in broad money, 27 trillion in base money. Okay, again, what's base money? This is what the central banks themselves print. This is the actual printing press. What's broad money? Includes all the institutions, financial companies that have somewhat, types of accounts. And by the way, stable coins, particularly dollar-based stablecoins, which are very small right now, a couple $100 billion market cap, that would go in here in M3. Stablecoins are completely analogous to a money market fund. So there's a lot of things that we could even add, but this is pretty good. And I just want to show you before we get into Bitcoin, but let's just look again. This is euro and some other data that I'm lacking, but I'll backfill it. But let's look at the money multiplier. All right, so let's just look here, and I'll show you back. But if central banks print X amount of dollars, euros, yen, what are the corresponding liabilities that are created by institutions as business goes on in the world? All right, that would be the money multiplier. It's here. All right, so we have a few years of normalcy, and then we get into massive QE. But if you just look here in the early years, which are still some money printing by central banks, before the global financial crisis, it was about, you can see, 10x. Which is interesting because, again, demand deposits are a small component of this broad money. It's not huge. But even if you count all the other deposits and other things in the system, the multiple is not huge. It's much bigger in the US alone, by the way. But if you add all the other currencies, it's not so big. But once they got into the crisis and Helicopter Ben and all the other stuff, you'll see that the ratio just sort of cratered. And then on the eve of silly season, it was starting to actually go back up, return to normalcy. That was actually too hard. Repo market spiked here. And then they, printed even more base money. Broad money also rises, but the ratio is completely cratered. It means there's more base money to broad money. All right, so it went down to like 4x. As of June, 5.2x. Just to show you, again, I sort of cheated here, but I normalized it where it was about 10.7x, and I just took the ups and downs basically. So you can see in normal, quote unquote, normal central banking times, which is every living economist on TV today who thinks they sort of know something about the world, they all came of age when the broad money, which includes M2 and includes M3, includes all these different accounts, was 10 to 1 base money. Okay, so this is how it looks. This is a broad money supply that I'll continue to tweak, and I think it's pretty good. It's pretty accurate, particularly from the year 2000. But the ratios are completely whacked up, right? It's just not normal monetary creation like we had before. Okay, now let's look at Bitcoin. So again, here's the broad, going from 2002 here. Here's the base. Sorry, here's the base. I had broad, putting broad back on. It's been my contention for nearly 8 years that Bitcoin is not comparable to this money supply, because this money supply has a lot of liabilities from a lot of institutions that are based on a lot of different things that no one person in the world understands. There's just a ton of monetary liabilities on the one side for banks and insurance companies, whatever, hedge funds. And on their asset side, it's usually debt, bonds and debt, government bonds, debt, loans. That's what's on their asset side of this. But this is the size of the money supply. And since there are massive amounts of liabilities that, no one person in the world can really understand, and yes, you can use that word, created out of thin air, whatever, but there's still economic activity here. Again, I'm not, just because I'm talking about it doesn't mean I'm defending everything, but the money supply generally goes up, not always. And during a crisis, it can go up faster. But none of this is really comparable to Bitcoin. This money supply is comparable to Bitcoin. Why? Because it's the central bank money supply. Central banks are the core of the system. And this is how much they've printed. I'll do more analysis on the actual rate of inflation later. My headline rate, which has been about the same for years, is 12.7%. So in native terms, weighted average is something like 12.7%, is doubling every less than 6 years. It doubles every 6 years or even less than 6 years. But also a factor here is the dollar is not losing value, but gaining value against these currencies. Many of them. Not all of them, but many of them. So that's why if you look at this chart denominated in dollars, other currencies, which are a huge factor of this, 80%, by the way, is non-dollars in this stack of money. If it goes down, it doesn't always mean that they're just printing less. They have printed a little bit less, but not too much. So there's also a factor of the dollar getting stronger or other currencies getting weaker. It's important to keep in mind. All right, so let's first look at broad money. No, let's first look at base money. Sorry, I'm just considering. So we have this from 2002. Again, this is pretty accurate. This is worldwide figures. Less than $3 trillion in base money 25 years ago. 5 years ago, it got to 30. Now it's down to 27 and change. All right. This is over 100 currencies in the world. Let's just sit on this for a bit. Let's look at Bitcoin in market cap. All right. Let's even zoom in here. Okay. Obviously, when Bitcoin, Bitcoin's on the right-hand axis here of value. So when Bitcoin is only being, $13 billion valued market cap, and the rest of the global financial monetary printing press is 15 trillion. There's not much of an indent there. There's not much of it doesn't really matter. But you can see that global base money was also going up at this time. 2017, actually going up as well, even in dollar terms. It topped out a little bit later in 2018, but it was going up. Where's that? Someone's calling on an iPad or something. Then let's go to this little period. Interesting. We had a bump in Bitcoin, but the global based money was falling. And this is led by the United States, by the way. So this whole period, where you see that it's flat, right? You see that central banks are not printing. They're even going down or they're losing value against the dollar, which is also part of it. They're not printing from 20. If you look at this flat, I mean, okay, they printed from 2016, it was 18 trillion, got up to 23, then went back down to 20. So it's not flat, slightly increasing. But if you looked at the United States itself, just the Federal Reserve, I've talked about this many times, you would see a flat number, 4.5 trillion or so, all the way until here, and then even going down until the start of the silly season. But globally, it did go up slightly. So if we compare that to Bitcoin, it did go up. Now, the craziness started here, right? Bitcoin also went down. And the Federal Reserve was starting to print also separately here. I should show both, really, just so you can see the difference. But anyway, once this period started, the world was collectively losing their minds. Money printing went up, and money printing went up, for almost a year faster than Bitcoin, right? We're at 20 trillion, 20.7 trillion in February 2020, and by December 2020 we were at 28.5 trillion. Now it's true at this point in December, I'm sure you all remember, Bitcoin was starting to rise pretty quick as well. This is market cap you're looking at. Okay. And this does line up, right? I mean, it's more or less true that as there was a lot of liquidity sloshing around, Bitcoin was high. And then I have to say, looking at this as well, more lined up than I remember, let's say, going down. And we truly bottomed out here, right here in Bitcoin. But the Bitcoin started to go up while central bank money was not going up. So that's a key difference here. And if you ask, well, why is Bitcoin going up while central bank money is going down? It comes back to what I've been saying for a long time. I think 90% of this has nothing to do with this chart. I think it has to do more, even though you can see that it certainly lines up, when there's more money printing, Bitcoin's price is going. It even lines up kind of good here. Does not line up here. Although it's also possible that we can have a huge spurt of money printing into December and start of next year, and Bitcoin could also go up then. But as far as Bitcoin going up in value while central bank money is going down, I think that's a clear signal, at least here, that something else is also going on. And so again, I'm not going to talk about this right now a lot, but that's where we go back to the power curve. Power curve is clearly a lot more signal of what Bitcoin's price does than the money supply. And yes, we are at the median, we're low. When I pulled this in just now, it was 91. No, it's not today. 91,696. But let's go back to the money supply and let's do a little bit more of an analysis here. So Bitcoin's going up, base money supply is going down. Let's now look at broad money. All right, looks better. This one, I have to admit, looks decent. Sort of Bitcoin is crashing when it's crashing. But the conclusion that I'm at least coming back on here is you're talking about something that is, you know, beyond an order of magnitude different, right? $143 trillion of broad money. Bitcoin is $2 trillion as of June. So let's do a direct comparison then. What is, and this is where I wanted to see how it goes back to my earlier analysis, just looking at the regression of the money supply in exponential versus the regression of Bitcoin in power. Let's do a regression actually on the percentage. All right, so let's start with base money, which is this one, right? How small is Bitcoin from the beginning and how quick does it grow? Okay, so, you know, I can always use more decimals on these charts, but it's basically, you can see how the growth pattern, but it's still 0% of the money supply. And it wasn't until like 2016 when it gets to 0.1% of the money supply. And indeed, that is about the size of most small currencies' monetary basis. So 2017 was a big year. It passed a lot of currencies for the first time, and it got to 1% of the global money supply. 2021, we get to 4% of the money supply. 4 in November. Fall back down, and here. Let's start to put some bands around these and just look. All right. Let's even take this off, because you'll see later the difference. So based on the trend and where the trend is at the time, we're not in an extreme point here yet. If we were in an extreme point, could be a time to sell. But again, that's because Bitcoin itself is way more volatile than the monetary base. So where we are right now, about the 70th percentile, which is 2.2x the trend. All right. But the overall trend, interestingly, is quite low at the moment. Again, because this is low. Right, so Bitcoin's going up well faster than this money supply is going down. And you can see all that sort of, this black line starts to sink down, down, down from, you know, about 2 years ago, 3 years ago, actually. No, even 4, yeah, 4 years ago as we're pumping. So it's still a good R², and it's still a good representation, but I'm not sure, you know, I'm not sure with Bitcoin's, like, the life of data that it has, that this is the best predictor of where Bitcoin's going to go. Let's look out now at when it's going to get to 100%. All right, not the bands, but the black line itself. The black line itself, when will it get to 100%? Here, 2047. And if you remember, I've shown this a lot. I've just used my old monetary base data, which is close enough, extrapolated that curve on an exponential, extrapolated Bitcoin's curve on a power curve. It crosses sooner, about 2041 or so. I can pull up the chart for you to see it. And if you had to ask me, this is sort of my current thesis. I'm trying to defend my thesis here, basically. But if you had to ask me which one will look better, that is just Bitcoin growing on its own on a power curve, or Bitcoin going to the monetary base, which is here, which is a slightly different curve because I don't have those extra 20 currencies, but I haven't harmonized it all yet, but don't worry, it's not going to be much different. Here's the curve. All right, this is global base money. We're well under trend, as you see. By the way, you can see the number. There's my number. That's the real. Even here, I shouldn't extrapolate because I don't know for sure, but this is my number, 27 trillion, and this is after looking at some more IMF data, 27.38 trillion, so about 300 billion more. In any event, it doesn't really matter. Brass tacks, what I'm trying to show you is Bitcoin crosses this curve much sooner. In fact, latest now, yeah, April 2041. It was May, I think, for a while. March. Yeah, even February. February now. No, not bigger in February, bigger in March. March 2041. And I mean, look, as a projection, I wouldn't, maybe no one knows what's going to happen 20 years off or 15 years off. But if you ask me which one looks better or makes more sense, it's this one, where I keep them independent of each other. Right? I keep them independent of each other. I run the regression, and then we see, we can see the multiple basically. In my opinion, this one, which is very specifically looking at the percentage of Bitcoin versus the money supply, it starts to get overstated. Specifically because of the size of Bitcoin here is much bigger, actually, than the trend. It's double. Right? So as of June, Bitcoin was 7.8% the global monetary base. And the trend, just based on those two numbers directly, running a regression on the percentages should have been only 3.6%. So if you can follow that, bottom line is I'm not convinced that the money supply, yes, it generally grows. Yes, Bitcoin generally grows, but I'm not convinced that you can find some hidden price gems in this relationship itself. And look, if anybody tells you they know what the price of Bitcoin is going to be in 2 months, I would rather take comfort in the longer term trends like these and then just plan accordingly. Although, having said all of that, even though this is a more negative view, this gives us a more negative view of where Bitcoin could go, right? You're still not too much, you're only 6 years off. So it's not terrible. Between 2041 and 2047, we'll get to 100% of the monetary base. But these analyses of like M2 versus the Bitcoin price, and you stagger it 10 months or something, they're they're not very robust, and it's not complete. I mean, it's just not complete data. M2 is just retail deposits. M3 is the fast money. M3 includes institutional deposits. So you got to include that in your ratio of to Bitcoin. All right, let's look at M3 now. This is the same thing. But now let's compare Bitcoin to broad money, right? Which you can see it's a little bit of a better fit. Even though it has nothing to do with broad money, Bitcoin is a completely different beast than, a time deposit. Let's put the 90th and the 10th. Still, it's actually high. About by double. So the trend line says 0.8%. We should be at about 0.8%. We actually are at 1.5%. And let's project out to when it's going to get to 100. Actually, we're not going to hit it. Yeah, because it's a way bigger base. Theoretically, it shouldn't ever be over 100. I know I've said that before. But again, this is like a lot of detailed money supply research, and all I see when I strip all this away is I mostly see the price of Bitcoin, and it fits a power curve. And it's okay, 94%, but I don't think it necessarily tells us where the price of Bitcoin is going to be, or even the relative risk. Remember, if we take the same principle as I've always done, right here, if we're above the 9, it's a little bit risky, whatever. It's in the same area. It's not above the 9. It is a little bit weird that the trend is low, like quite low. But again, that's more a function of the money supply growth than it is Bitcoin's growth. And I don't think it's that great of a predictor. Yeah, I heard they had good openings. I don't think I have the updated. That's actually one of the things I wanted to do was give you an updated operating cash flow of the top tech stocks versus their market cap. I don't have it at the moment. This is interesting. As long as the fiat Ponzi continues, MSTR works fine. They pay a lot. I mean, these are your government bond yields. Gilts at the 40-year are paying 5.4%, and Strategy on their euro bond or their euro instrument is paying 10. So it's pretty wild. I think it's good for Strategy, but it'd be very dangerous for other people to. And again, do you want to buy that instrument from the third best Bitcoin treasury company? I think it's very dangerous. But it's probably going to work for Strategy. Look, at the end of the day, the money supply is the money supply. Bitcoin is Bitcoin. This money supply, yes, it might seem, especially with this, pandemic pump, that it really lined up, and it did. right? But Bitcoin's growing much faster now versus what the broad money supply is doing. In my opinion, it's a much better judge of value to just look at the price itself. You know, a lot of people, including myself, thought we would be able to be talking about, you know, how high is it going to go, right? We'd be right now above the 8, above the 9. We're not. We're not. But we're also not, you know, below the 1. That happened during a very, very down market. And we're right at the median. Just below the median, 93,000. So 50% of observations have been below, 50% above. The trend line itself is above. What is more important, and this is my next step with the money supply stuff, is both on a broad money and on a base money basis, is getting reliable trend lines of those curves in the individual currencies in their native units. So, like in Indian rupees, in Japanese yen, in Brazilian real, Argentine pesos. And I need to refine it a little bit more, but because I've never done the regressions for all of them, this is where ChatGPT is actually helping a little bit with code because I usually do it like one off. I'm trying to make a good consolidated, nice data set now. But based on the average growth rate, monthly growth rate, it should be around 12 to 13% is the growth rate of the base money supply in the modern era, 12 to 13% per year. If you turn that into dollars and then ran the regression, it's something like 10.2%. So it actually shows that just using the dollar as your numeraire there, uh, the Federal Reserve has a 2.5%, um, premium on other currencies due to dollar world reserve currency status. I did not. Was this a recent announcement, Murphy? Let me put it up. Why is my mouse? Was that a recent announcement? I know that they talked about collateral for a while. We know it's coming. I think this is the time where you should all congratulate yourselves, honestly. Not resting on our laurels or anything, but it's not that hard to see the writing on the wall, right? Um, anyway, the point is, I would caution against using the money supply specifically for price predictions or where Bitcoin's going. Um, I would say, okay, it can be like one indicator to show if it's, you know, aggressive or lagging relative to the money supply. But other than that, just like I say with everything else, right? I'm very, very skeptical of these ideas that like you can take the money supply and take a 5-month lag or something of what M2 is doing, and then the Bitcoin price is going to do that for all the reasons that I said. And look, I mean, it's undeniable that the money supply has gone down over the last 5 years, and Bitcoin has gone down and up. So I think most of these like tweets that people talk about this on Twitter, they're firstly only using the dollar. Secondly, they're only using M2, which is not the broadest money supply. And thirdly, you know, this is where it really isn't a science. I mean, we can't tell for sure when prices are going to scream versus the money supply being printed. There's a lot of other things that happen in the economy. I'm not defending them. I'm just saying, in general, yes, it's clear both of these are bottom left to upper right pictures, right? In general, yes, but specifically, I would not rely on those metrics. Good old BIS. Yep. I mean, it's going to be magnificent for sure. I'm talking with Steven tomorrow. I'm very excited about it because I've been talking to you guys a lot about my questions with an asset that moves in power like this, while all the other assets move in exponential like this. So, even though we're way below trend right now on the money supply, it still moves in this direction at about an 8.2% CAGR. Within 10 years, I mean, there's going to be some serious changes. Wish I could tell you guys sooner, like some other number, but I mean, within 10 years, we'll be close to half of the monetary base value. So, congratulations. I still think gold as well, though it may go for a time. Right. So again, gold's doing the opposite of fiat. Right. So this is, this is 10 trillion higher than trend. Right. And even if we say that it's going to stay on this high level, which I don't think it will, for reasons I've talked a lot about, but let's just use my mouse just very briefly. Let's assume it stays here at 23 trillion and then goes over at the same compound rate. We only lose a couple years before we pass it, like here maybe. All right. Follow that. So it might be that gold is 50 trillion when we pass it instead of, 21, which is already below the value today. Gold is definitely in a weird spot. What's the question? buy or sell, hodl. No financial advice. No, I mean it's about being calm. That's what this is. It's about being calm. Another thing I can pontificate on. I'm telling you guys, from the global financial crisis, I was reading all these gold newsletters, all this shit, and people are always saying the sky is falling, whatever. Look, I'm seriously worried about our safety in Eastern Europe. We have a lot to worry about where I live right now in the Baltics. But you can't like let it, destroy your life. You can't let you can't not get out of bed in the morning. And this is where I really do believe that there's, whether it's the gold market, whether it's the platinum market, whether it's the Bitcoin market, there are a lot of people that are ready to sell you fast information for hype that, you know, I think it's very rare where someone pitching you free or even paid research is going to come down with like, a spot on perfect macroeconomic projection 6 months from now. And I actually say that even considering some really, really bright people. So, again, an issue I know a lot about the Russian Ukraine war. I saw Luke Grahman on Preston's podcast recently. Did you guys see this? I like Luke is stellar. I really enjoy his stuff. He's got a newsletter, sure. But I mean, his is quite detailed and he's, knows what he's doing. But one of the, it's almost kind of a throwaway line, but what he said a few times was this idea that Russia had sort of, I actually forget the word that he used. It's like Russia neutered NATO, basically. Look, I live in Eastern Europe. We always want NATO to do more. Specifically, when we say NATO, I mean like the U.S. led NATO. But that itself is changing. Europe's spending a lot more, and Russia has spent 20 months getting 40 kilometers in the woods, in the forest, from one city, Avdiivka, to the next, Pokrovsk, and it still hasn't fallen. And that's not a sign of mighty Russia uh, doing something amazing against NATO. It's more a sign of Ukrainians being heroes. But they're like, you turn the dial, right, with macro. We talk about doing this, this, this. You turn the dial. There's still, I think you can fall back on a few big items here that I don't see changing necessarily anytime soon. One of them is these currencies are falling relative to the dollar. Again, that's why, yes, the money supply has actually gone down here in native currencies, but also currencies are falling. Here's another one. I'll show you. Thank you for the comment, Few. Yeah, something like the outproduce NATO. I mean, that's already changed. NATO's producing more. I have to see this on China's gold strategy. But yeah, I could see like it's very interesting. Again, I have nothing against him, and I'm not trying to single him out. It's just this is a view that people in the newsletter space take often to say that the U.S. is the worst thing ever, and they've done plenty of bad things. But like Russia is not the rising star in this discussion. Ukraine will be. Ukraine is going to be a powerhouse in 10 years, unquestionably. They're going to have a lot of anger and PTSD. But see my interview with Sean Pinner yesterday. But let me show you. Let me show you this one. Thank you, Satozo. I'm definitely not changing my tune there. I mean, uh, I try to be principled on most things, but no way I'm changing that view. Good morning. Dog said B. Here's another one. All right, you guys have seen me do this a lot, and again, it's not. I'm not saying. I'm not defending the status quo when I show you these charts, but they have ammo, right? If you watch that Luke Rahman show, and it sounds like some of you did, um, he's talking about all the short-term bills that are rolling over, old stuff. It's true. There's a lot of, you know, you got to find more people to buy those treasuries. They're talking about stable coins, all the rest. But it's not like the Fed could not come in and buy more. And this is as of October. Because I could do, yeah. No, this is October month end, real numbers. They're down to 16.5% of the national debt. Doesn't matter the duration of the bonds. This is all the bonds. Yeah, I'm not saying it's a good world if they go back to 30% of owning the national debt, but they could. Bitcoin would probably do well as well in that scenario. Bernanke certainly messed a lot of things up, unquestionably, right? I mean, he sort of gave everybody the idea to do this, and I'm not defending this. If they just let everybody, flush out the bad liabilities, restart from a better base, would have been better. Again, look, Federal Reserve is flat here. Federal Reserve balance sheet. It's completely flat. And Bitcoin spiked here. So at risk of beating the dead horse on this with this topic, of course Bitcoin's going to rise when the money supply rises. But can you really find like a hot tip there? This is the more accurate money supply. This is the central bank money. Only central banks control this screen. This stuff is more squirrely. All right. By the way, I probably should have stacked it. There's a slight overlap in that. This cash outside of bank vaults. I don't have all that detail yet. I'll eventually get it. This was an interesting little cratering of money supply and Bitcoin, I have to admit. But I wouldn't want to rely on the money supply to like right, so by this point, Bitcoin's already down to, I don't know what the price is here, 35,000 maybe in April 2022. But it's like by right here, you'd have to be saying, oh, well, the money supply might be going down. Bitcoin's going to go down. Again, I think it's more coincidence than it is true that the money supply went down a bunch from here, from April to November. It went down $5 trillion worldwide. Okay. But using that as like a indicator to lighten up your Bitcoin holdings, I think it's too early. Maybe later, maybe in 20 years, that's the story will be different. But so whoever's using these lag indicators, like it could be, okay, so here by October of 23, you can see that it starts to go up with your eyes. You can see the green is going up. The green supply goes up from 127 to 130. Okay. So in a few weeks, that seemed like a big move. And then November, from November, you had to wait 4 months, and then Bitcoin made a big move. Or actually 2 months until it started. But then you see here it was 138. It goes down to 134. Bitcoin's going up. And honestly, I think some of this data is not really great anyway. Like I'm going through this with a fine tooth comb. Like I'm not the broad money supply as much. I'm relying more on the IMF here, but I am using the biggest currencies. Like I am doing that myself from the original central bank source, and in particular the dollar M3, which nobody has. I mean, and it's not even complete, right? It doesn't have the euro dollar balance. So I remain unconvinced that tracking the money supply is really going to get you some understanding of where Bitcoin's going to go next week. I wish I knew. I'm not ruling out a pump still. Maybe the last one standing to say it, but 125. I've said it for a while, right? I mean, that's the trend. We're in serious dangerous zone, right? James said it himself, and you can see it with the data. There's kind of like a vacuum between 90, 80 and 95K. I would personally position myself more to buy lower at this point. I mean, it just clearly seems like the market, is bearish, negative sentiment. I know all you guys have seen it. But the crowd can also be wrong, and maybe these fake outs can happen. Maybe the gold ratio reverts to that 65 ounces from 22 it is right now. I think a lot can change in a month. I really do. It's a good thought. Very good thought. Uh, That's a good question. So is the money supply controlled by sovereign states only? For this one, yes. For this one, base money, which is the one I've been tracking for a while. It's what my handle is, right? One base money. Uh, every sovereign central bank literally controls it. And it was part of my thinking, honestly, at the beginning was why to track this is because I saw in Bitcoin world in like 2016, 2017, people were saying, oh, all the government does is print money. And that was precisely the time when the Federal Reserve was shrinking their balance sheet. They were destroying money, as you see in this chart. So I just saw that, It's not what the newsletter people always say. Where's the damn chart? Did I lose it? Here. This is the same thing. This is on the asset side, so it looks a bit smoother, but this is the base money basically of the US. They were not printing at all here. And they went even down. So anyway, sovereigns control it mostly here, and then here it's just counting up. It's just an effort to count up all the financial institutions in that country, in that currency. And then you have the added complication of currencies of other countries that are also in that country, right? So offshore dollars. And I just don't have that. It's a big project to try to get something like that together. It's possible the euro dollar market is a $50 trillion market. I can even ask, let's see what old Gemini says. Not that I necessarily recommend Gemini, but yeah, gold money. I don't agree with this either. Uh, because of dollar obligations, gold money people made a $93 trillion estimate in 2023. They're talking about, again, Gemini is always wrong. This is off balance sheet, not on balance sheet, but all the dollar obligations to pensioners is true. It's way more than the national debt of 37 trillion. While previous estimates were much lower, over 5 trillion in 2014. No one knows. But in any event, to keep answering your question, as I always get on these tangents, um, this is supposed to be a survey that central banks, they take a survey of all the assets and liabilities of the institutions that they regulate, and then they count up the deposits. That's all they do. And uh, that, of course, doesn't include shadow banking things. For example, like peer-to-peer lending is becoming more regulated now, but there are people that have dollar balances on some of these platforms that or euro balances. It has nothing to do with anything in a bank. That's not included in any of these money supplies. So it's very squirrely, this broad number. I just don't think you can time the price of Bitcoin due to this thing. The more interesting thing is to measure it, measure the trends, how big is the growth rate, which, by the way, like I said, base money, it's in dollar terms, it's probably 10.2%. In native currency terms, if you could take that weighted average it very specifically, it's a little bit higher, like 12.5%. I can do it right now. It's a good question. So let's do Canadian dollars, see where we are. I did this on the fly because I think it was Pan B asked about Turkish lira, and we should do it for all the others. Just give me a second. Are you talking about in crypto? Like crypto markets getting punished on margin? And yes, I agree. Claude is a good one. What do you guys think of Claude? I've been using that for coding stuff. It's very good. It's amazing the cost that it's helped me save. coming. It's coming. Just 1 second. We'll get Canadian dollars up here. It's such a goofy chart. Canadian dollars, you guys still use the regular dollar sign. Fix that. But I'm not going to put the dollar sign on just right now. Oh, yeah, I'll do it. I'll do it. I will get these up eventually. It's just gonna take some time, but I know you guys want to track this stuff when you don't have to watch me. But it's not coming next week. It's not coming this year, to be honest. It's just I'm still trying to get my back end better. I've created everything so sort of hackneyed over the years that it's become a bit messy. One second. Almost done. Almost done. Maybe. Here it comes. Canadian dollars. Whenever my stupid spreadsheets load. Give it a second. What do you guys think? How low are we going? This number 4 has been pretty good support. All right, which is the 40th percentile. I know you can't see it that well on the chart, but you can see the number 4. Right now, that's 77,000. Wall Street knows about this curve. I'm not saying they know about it from me, maybe from Giovanni or whoever, but they're definitely playing around with all this. time to load the CAD for some reason. These guys have a great Black Friday sale, by the way, if you haven't heard. I have no affiliation with TradingView, but it's quite the platform. All right, here's the loonie. This is a little bit more academic than I'm just triangulating from the exchange rate. I'm not taking any exchange. So 128, 128.9. Actually, exact same as the dollar, going to the 50th percentile. At the moment, and if we looked at the 40th, similar support action in the last 2 years. I find it very hard to believe we're still in a secular bull. So if we go back and we just completely lose the bull here, I mean, obviously that'll take a long time to recover, but I just have a very hard time believing that's where we are. I know I'm on camera, but just muting there. Yeah. What can I tell you? More of a numbers nerd than a computer nerd. But looking at the loonie again, I don't see anything particularly different. Damn it. Anything particularly different than the dollar trend. It's not like the naira or the Turkish lira where it's like way high because, you know, obviously ever since what, about 10 years, for about 10 years, the Canadian dollar's lost, it was quite strong like 15 years ago against the dollar, but then it fell into a channel, right? Something like 10 years ago with the dollar. The only reason I know that, by the way, is again, I was reading a lot of these newsletters were like, oh, Canada's like the best resource country and it's going to have the best, strongest currency. And then I go into Canadian dollars for some investment and lost like 10% even just on that trade, the dollar to the Canadian dollar trade. This was like 15 years ago. Yeah, I mean it's quite similar to the dollar action. Hello, Roshima. I think you're right. I think we are. But we're gonna find bids. I mean, I have a very hard time believing like a year from now we're still in this. I don't know, like we turned this little bull market here into some bear, and we're just hanging out down here. Possible, but yeah, I mean, not much more to say about that. As I talked about the Bitcoin versus base money, Bitcoin versus broad money. If you just look at this, I mean, you see the price more than anything else. This is a percentage of, and what I see here is the price. It is true this is slightly elevated, in fact, way elevated because of the weakness in base money and even broad money over the trend. But I don't see that here manifesting itself here on the actual chart of price. And look, at the end of the day, like they say, or like they're starting to say, if they're going to print more in December into the next year, all right, it's just more fuel on the fire. But again, I wouldn't rely on that to trade Bitcoin. I mean, how big of a fake out was the last summer, right? Everybody thought Loomis was going to, issue some more statements. The administration was going to issue more statements about all the official Bitcoin reserve stuff. It just didn't come. And all those guys bought Bitcoin for less. And now they're buying it for less again. It's Canadian dollars. Give me 2 more months, then I'll say that we're done with the cycles. Let's get through December before we say anything more about that. Yep. Tariff tantrums. I'll get to this tomorrow. I was doing too much work with this stupid money supply before the show today. But once I pull this up, like this is just gonna, yeah, people say Bitcoin's volatile. This only goes back to the 6th, so 2 weeks ago, but is just incredible. You know, from 18 trillion down to 13.8 during Liberation Day. It's all wacky. I'll show the price of sales ratio and also the cash flow multiples. I'm curious to see how those numbers look relative to the market caps of these stocks. I mean, everybody believes they're overvalued. We just have to see. Yeah, so back here, I mean, if we were to assume that this is a trend, a support, again, I'm not claiming that it is, but yeah, I agree. We could definitely fall back to line 4. You know, deep into, say, line 3, then you got to start to wonder, are we out of the bull? No one said it would be easy, right? I have to admit, in the summer, I thought I would be talking to you guys about how long we'd been above the 9 in prior cycles. You know, when we were here in May, going back up into the fall, I thought it'd be like, okay, how often have we been above the 8, above the 9? We haven't been even been above the 8 this cycle. But I'm not counting it out yet. Look, a lot can happen in a month. All right, September 2024 is 57,000. October 72. November 95. 20K a month. I'm not saying it's for sure going to happen, but I know we've had a lot of selling. If you're not thinking at all about taking chips off the table or whatever, which I wouldn't recommend too much at the current price, you know, be buying more at this price. But again, not financial advice. Let's just go back to not forgetting the big picture here. This is the big picture. It's very rare for price to be outside of these bands right here. Very rare. So even if we got a few months down to going down to 40 is extreme. Under 50 is extreme, as a lot of people have said. But look, it's a big delta in Bitcoin. It's a volatile asset still. Based on prior price movements, we could be, the delta is 200K. 200K. So I really do think anything can happen in the next month or two. I might be the last one to not count the 4-year cycle out, but let's at least wait till year end before we think about completely discounting it. What's the national rag? It's a some business magazine. Yeah, I mean, let's start to close it here, guys. But the all these currencies are growing between 8, 7, 7, and 50%. Weighted, you get to a number that's, like I said, above 10, but not by too much. I would not rely on mystical newsletters which tell you that the money supply is going to predict the price of where Bitcoin goes. It's the same thing that happened with gold, by the way. Gold bugs have been wrong for a long time about that. But what the gold bugs do not have that we have is this awesome power curve. And a very early phase in Bitcoin's adoption cycle still. Globe, yeah. I could pull up very quickly. You have an M3 as well, which again is always better to use because it includes institutional as well. Let's see where my latest. Through July, I have it updated here. And if I went from 1970 to July 2025, it's going to be a divide by 0. This is a bit rough, but 0.7 a month. It's 8.4 a year. And it's going to be closer to your number, by the way, because you don't compound like that exactly. But yeah, that's on M3 Canada. I want to get, those are the charts I want to get the most on my site. Some of these econ charts so you guys can see all the different ones. Because at the end of the day, with this long-term stuff, it's not really, in my opinion, about what the Fed did last week. It's more about what has your currency done over the last 50 years? Okay, and then you can maybe say what has it done in the last year or 3 months, but overall you have an idea of a number that you need to beat with your own personal balance sheet. So for us in the Western world, it's usually, 8, 9. 8, 9%. It doesn't even tell you that that's what prices are doing each year. It just says at least if the money supply is doing this, you got to at least be doing that. 8, 9, 10%. Stock market in the U.S. has done, 11% since 2008. Add 2% for dividends, that's 13%. I find those numbers much more valuable than, you know, what did inflation do last quarter? Makes news, but it's always going to come. This is also again why I'm an inflationist. Like Peter Schiff is correct here to say that he's an inflationist. These deflationist guys, which also there's a bunch of newsletters from the deflationist guys. There's no way that they're going to let deflation happen. That would completely collapse the system. They're always going to inflate. Simple, right? But sometimes you actually got to look at the chart over the long period to see, yes, currency units always inflate. I know we have an issue there, but this is all good. Monetary base was less than $200 billion equivalent back in the 70s. Now 27.4. But to make sense of all that, wind it up to a compound growth number. In dollar terms, 10.2% in the native term, all weighted average of the native currencies, it's like 12.5%. So those currencies on average lose 2.5% per year against the dollar, just for the privilege of printing their own money. Thank you. I'm glad to hear that. Anybody else want to see anything else? Bottom line was, this was extraordinarily fast, right? From 20 to 30 trillion. Now they've been trying to figure it out. It's too much. They've cut too much. Currencies are devaluing. They're gonna do more printing. Even though currencies are devaluing, they're still gonna print more. And we'll be back at some point to the trend, even though it's true we probably won't be at the actual trend for a while. Look at that. We're nearly $10 trillion under the trend. And I'm only showing you from June on the other charts because that's for sure what I have. It's with all the updated currencies that people haven't tuned in. I'll be updating all this quarter in the report, but 27 trillion was my old number with like 50 currencies. Now I have, I don't know if I said it correctly before. It was 50 currencies, like 90 countries. Now I'll have something like 75 currencies, 115 countries. And that's a $300 billion difference. So it's mostly the same, but in any event, they're going to have to get back to trend at some point here. And that they'll do. Again, it's not Amazon Prime, but if you guys like the shirts, if you want some, let me know. Do different designs here for you like I have. We can do the memes. Doing a manual run here to start. And then my guy, same guy that does the stuff for Hodl Hodl. You can do the memes. Old man yells at Bitcoin. Genesis block. Whatever you want. Just let me know. info@porkopolis.io. info@porkopolis.io. I'm happy to work with you. Much easier if you're in Europe, but for our North American friends, we'll make it happen as well. Okay, guys, I'll see you tomorrow. I got a good one in the afternoon. I'll try to stream in the morning as well for the European friends, but we got a good one with Stephen Perrinaut at 2 think it's going to be 2. I think we're going to do a live stream. Actually, I haven't confirmed with them, but we'll probably do a live stream. So that's 2 p.m. Riga time, Latvia time, Baltics time, noon London, 7 a.m. US. But it's always available on the platforms after. All right. Thank you all for tuning in. Let me know if you're interested in the swag, and see you tomorrow.